Introduction. On Friday, October 10, 2025, the crypto market faced a catastrophic event dubbed its own Black Friday. In mere hours, over 19 billion vanished, with more than 1.6 million traders liquidated. The trigger? A single social media post. This was the largest liquidation event in crypto history, raising the question, is the bull market over? This analysis breaks down the crash timeline, the geopolitical U.S.-China tensions that sparked it, potential insider trading, and what it means for Bitcoin, altcoins, and your portfolio. This is Crypto Money News, providing educational content, not financial advice. The crash timeline early. Last week, the market was euphoric, with Bitcoin hitting all-time highs above $126,000. By Friday morning, BTC traded above $122,000. Thursday, October 9th, China announced export controls on rare earth minerals, a key component in tech and military products. Friday morning, President Trump posted on Truth Social threatening a significant tariff hike on Chinese goods. The VX, Wall Street's fear index, surged 32%, and Bitcoin dipped to $117,000. Friday afternoon, Trump's second post announced a 100% tariff on all Chinese imports. Bitcoin crashed $3,000 instantly, triggering a liquidation cascade. BTC hit lows of $14,500, briefly touching $12,000 on some exchanges, a $20,000 drop in a day. Altcoin impact. Ethereum fell 21%, XRP, Solana, and Dogecoin dropped 20-30%, while Cardano, Chainlink, and Aave lost up to 40%. Why was the crash so severe? The crash resulted from excessive leverage. Bitcoin's open interest hit a record $94 billion, creating a fragile market. Trump's post acted as the catalyst for collapse. Poor timing. The announcement hit on a low liquidity Friday afternoon, amplifying the damage. Exchange failures. Platforms like Binance, Coinbase, and Robinhood reported frozen order books and disabled stop-loss functions, turning a correction into a collapse. Liquidation cascade. $19.1 billion in leveraged positions was wiped out in 24 hours, compared to $1. $2 billion in the March 2020 COVID crash, and $1.6 billion during the FTX collapse. Over 1.6 million traders were affected. Geopolitical context. The crash was rooted in U.S.-China trade tensions. China's move, export controls on rare earth minerals, were a strategic play ahead of a Trump-Xi meeting at the APEC summit on October 31st. Trump's response. After claiming the rare earth issue was resolved, Trump retaliated with tariffs, escalating a conflict over trade practices and intellectual property. Crypto as collateral. The market became a casualty of this geopolitical brinksmanship. Insider trading suspicions. Evidence of potential insider trading surfaced. On Hyperliquid, a whale wallet, a Bitcoin OG holding since 2011, made $200 million in profits through perfectly timed short positions on BTC and ETH. These positions were built days before the crash and doubled down 30 minutes before Trump's tariff post. Crypto attorneys are calling for investigations to determine if this was a savvy trade or privileged information. What's next for the market? Bitcoin's resilience. Despite dipping to $12,000, BTC held the $100,000 support level, stabilizing at $110,000 or $113,000. This suggests a derivatives-driven crash, not a spot market collapse. Institutional buying. BlackRock's spot ETF bought 21,000 BTC, and XRP whales accumulated over 1 billion tokens, signaling confidence in the bull market's fundamentals. Altcoin challenges. The altcoin season index fell to 55, below the 75-point threshold for a true alt season. Bitcoin dominance has spiked, indicating capital flight to safety. Future altcoin rallies may focus on AI, real-world assets, or ETF approvals for tokens like Solana or XRP. Geopolitical uncertainty. Trump's November 1st tariff deadline offers negotiation room before the APEC summit. His history suggests bold threats often precede concessions, but the 2018 trade war took 18 months to partially resolve. Prolonged. Tensions could deepen the sell-off, while a resolution could trigger a relief rally. Conclusion. The October 10th crash, sparked by Trump's tariff threat and fueled by record leverage, was the largest liquidation event in crypto history, erasing $19 billion and impacting 1.6 million traders. Insider trading concerns remain unproven, but the bull market's core drivers persist. The recovery hinges on U.S.-China trade negotiations, promising volatility. Stay informed with crypto money news for the latest updates.